My name is Michael Del Castillo, lead business reporter at Coindesk. We're here to talk about blockchain business. To get things started, I'm curious if we could poll the audience. How many of you are either already working for a blockchain company, aspire to work for a blockchain company, or are in the process of founding a blockchain company? That's awesome. I wish I had a picture of that. Okay, cool. For those of you who can't see that, it's like maybe 70–80% of the audience.
Wait, I want to get a picture of that.
Yeah, let's do that. Let's get a picture of that.
Can you reframe the question?
Yeah, I want to poll the audience here and ask, how many of you are either working for a blockchain? Actually, how many of you are working for a blockchain company? How many of you keep your hands up?
Give me a hands.
How many of you would like to work for a blockchain company? Keep your hands up. How many of you are in the process of founding a blockchain company? Keep your hands up. All right, everyone take a picture of that. That's amazing.
It's kind of like asking, though, 1996, how many of you work for an internet company?
I guess that's
want
true.
to work for an internet company?
You're right. You're right. So in my experience writing about how other people make money in blockchain, incidentally, I'm making very little as a reporter, but I have so much fun. There's really two ways. One is buy cryptocurrency and hodl. And then the other is this right here. Design, build, and invest. So I love the fact that that's kind of where Penn Blockchain decided to focus this event. And I want to use that kind of as the framework for our discussion on a bigger scale. To get things started, though, Amber, if you could kind of just walk us through a little bit about what is the J.P. Morgan Blockchain Center for Excellence? What have you guys been doing over there? And we'll try and keep this part of the conversation, the introductions here, focused on the design stuff. So what does design look like in the Blockchain Center for Excellence?
Yeah, so our group has existed for about 2.5 years at this point, and we handle 4 things. One, or first and foremost, is our business transformation strategy, so working with the heads of various lines of business to understand what investment banking means in a blockchain-enabled world. The investment bank handles wholesale banking, capital markets, and custody. All of those things could potentially be impacted by distributed ledger. So education and now transformation and pilots and partnering to build pilots, in which which startups we engage with to build those kinds of things, all of that falls under the purview. We also work with strategic investments to find shining examples of great startups doing good work in the space and invest. We work with various consortia and standards bodies like Hyperledger, like the Enterprise Ethereum Alliance, to help drive forward the conversation around standards and what businesses, specifically investment banks and J.P. Morgan, would like to see. And then finally, we've been shepherds of a platform called Quorum for the last couple of years, which is actually a fork of the public Ethereum codebase that addresses some technical challenges to adoption at a bank, just really to kind of frame the conversation around what might a blockchain platform look like in our view.
Awesome. And Brian, same question to you. For those of us who might not be 100% familiar about what exactly is Hyperledger, if you could briefly describe this massive organization that you help oversee and how design looks within that group.
Sure. Well, one of the most important things to understand about Hyperledger is we're part of the Linux Foundation, which has been around for about 15 years and has helped organize the activities in the Linux ecosystem to help really make optimal the developers and the companies who have resources to contribute and are building businesses and products and services on top of not only the Linux kernel, but now over 50 different kind of technology domains. And people think about Linux and it's almost like it's disappeared into the walls, right, into the plumbing, right? Because Linux is kind of everywhere from cars to phones. But the Linux operating system, the Linux kernel actually still sees 10,000 new lines of code every day, which for a 26-year-old software project is pretty impressive. And that's because there's always new hardware, there's always new places to run it, always changes to what people expect operating systems to do. And the foundation kind of came about out of a recognition that technology movements tend to go in one of two directions. Either one company tends to to become the dominant kind of monopoly with that technology and its application. Think Microsoft Windows in the late 90s, right? Or technologies become not only open source, but widely deployed, widely supported, widely implemented. And this is different than an open standard, right? I'd even say there's kind of 3 different kinds of organizations out there in the world. There's standards bodies, there's implementation groups, like open source projects, and then there's governance organizations. And if you think about like the domain name system, you have folks like ICANN, right, doing that kind of role. So the Linux Foundation and Hyperledger in particular have always kind of planted their flag in the implementation side, right? How do we really get companies, who are all going to go compete against each other, all going to build differentiated IP, look for some unfair advantage to play out over each other? How do you get them to at least not only agree on a kind of a common technology base, but actually work together to build that common technology, no matter what it is? And so when Hyperledger started 2 years ago, there wasn't a lot of clarity, and I'd even say there still isn't, about what is the right architecture for doing distributed ledgers and smart contracts. Lots of different valid ideas about how to do that. And that may not be a question that ever fully resolves itself. It may be that this space still will remain as heterogeneous and interesting as, say, the database market, where you have MySQL and Cassandra and all sorts of different kinds of databases, all sorts of different programming languages out there in the real world. But you need a place where companies can come together to work on them, where you can eliminate needless differences, right? And work together on code that then can be incorporated into products and services. So that's what we do at Hyperledger. We've got 10 different software initiatives, ranging from the ones you've probably heard about, like Fabric and Sawtooth, to projects that cover identity, like Hyperledger Indy, to an implementation of the Ethereum virtual machine, something called Hyperledger Burrow, and all sorts of things that make it easier for developers and companies to incorporate this, build upon it, and go out there. And so lots of interesting activity.
So Hyperledger has, we just talked about this, 235 members.
Next week, I'm sure.
Yeah, right. Well, we'll be following closely. Some of those members have contributed code base to Hyperledger, which is then collectively developed.
Right.
And each of them has their own flavor and their own possible use cases, and there's people building on them in varying degrees.
Exactly.
Amber, you are also, in addition to your work with J.P. Morgan, you are also one of the leaders. I'm not sure if you have an official title at Enterprise Ethereum Alliance.
I chair the financial industry working group.
Chair the financial industry. So, yes, she does have an official title. And I didn't give you a chance to talk enough about the Enterprise Ethereum Alliance. Could you, let's jump off of Brian's description of Hyperledger and talk a little bit about how it is that, what does the design phase of blockchain build look like within the Enterprise Ethereum Alliance?
Sure. So the Enterprise Ethereum Alliance is similar to Hyperledger in that they're both nonprofit bodies. Hyperledger focuses on, there's kind of different projects tackling different things and figuring out how to enable distributed ledger technology for business in a very kind of broad sense. And there's a lot of build happening there. You hear Brian talk about specific projects. Within Enterprise Ethereum Alliance, it's a little bit different because it started with a lot of entities that were already using Ethereum specifically, and trying to bring together what are essentially cousin code bases. There are a lot of people who started with public Ethereum, forked that code base, which is different than forking the public Ethereum blockchain, just in case you're not a coder, and trying to figure out how to bring those things back together. It's specifically a standards body, so there's not a single enterprise Ethereum client that they've decided this is what we're all going to build collectively. Who knows, where that will go? But their first mandate is to create some sort of shared functional specification that takes into account EEA has 400 members for what it's worth, but there's a lot of smaller members. The membership fees are cheaper, but to bring together.
I was going to bring that up if you didn't. Enterprise Ethereum Alliance is bigger than Hyperledger, but it's cheaper. So and the use cases are very different. The people who are building are very different.
So it's about listening to all the people that are there, which are startups. Big Four consulting shops, major incumbent technology providers like Microsoft, like Intel, banks like J.P. Morgan, like Santander, and other corporates like I don't know how many of them I'm supposed to talk about. I guess they're on the website. But they're all kind of coming together to figure out what the requirements are to make Ethereum specifically work for business.
So I'm imagining the audience here, which the image of your hands up in the air is going to stick with me for a while. Perhaps shopping, wondering, what is out there that you can build with if you haven't already made that decision. In your experience, and I'll address this to both of you, have you noticed one kind of company or one kind of entrepreneur or one kind of use case that tends to be attracted to the services that are being offered at Hyperledger and at Enterprise Ethereum Alliance, or is it a little more nuanced than that?
So there are about 24 different production networks out there now running on top of Fabric or Sawtooth, and one on top of Indy, which is the sovereign network. But these predominantly are in the financial services space. We've been through a cycle of 20 years of kind of the financialization of everything. So, for example, this year there'll be a launch of a healthcare insurance claims processing network, actually two of them, one by a company called PocketDoc, another by a company called Change Healthcare. Which will be Change, in fact, as part of McKesson. They process or touch something like 80% of the insurance claims in the United States. And they'll be taking this hub and spoke network that they've built over the last 10 years and turning that into a peer-to-peer blockchain network that they convene as a permission network, but the connections will be direct between them. So it's financial, but that's because a lot of what blockchains are about is finality and settlement and transactions and that sort of thing. So it's, there's interest from all sorts of sectors, from healthcare, as I mentioned, to all sorts of different supply chain sectors, and it's kind of hard to pin down exactly. But I'd say the banking networks as well. You mentioned, I'm sorry, Dean Garrett mentioned Swift before, right? And Swift themselves are turning from like a messaging network into a settlement network through changing their kind of, again, hub and spoke kind of messaging network between banks into a place where the wire from one bank to another gets settled immediately onto the ledger, and instead of it taking 3 days for your international payment to clear, it'll take 5 minutes, right? So we'll see a lot of existing organizations. DTCC, another company I didn't hear about before I got involved with Hyperledger, right? But holds, at least in the 60s when they were founded, held all of the physical stock certificates of every publicly traded company on Wall Street, where traders would move from moving pieces of paper by bike messenger from one broker to another to actually just trading pointers to a database held by DTCC. They too are transforming that kind of centralized thing into a decentralized network through blockchain tech. So they're kind of all over the map, and it's pretty exciting.
Amber, what trends are you seeing as far at the Enterprise Ethereum Alliance, or regarding Quorum specifically, as far as the kinds of companies or use cases that are approaching you?
Yeah, I mean, I can answer this in two different ways. So for Quorum specifically, we see businesses doing very similar use cases to what they're trying. In a lot of cases, there's quote unquote bake-offs where they want to try to take the same use case and then build it across different blockchains, because there's a lot of internal education that these organizations they're learning as they go. So we see a lot of cross-border settlement stuff. We do see supply chain. Pfizer and Genentech started a drug provenance tracking kind of thing. There's Internet of Things projects. I've seen drones register their MAC addresses to a Quorum blockchain. That's fun. But also, what you can't really underestimate is something like CryptoKitties out on the public Ethereum blockchain. Did anybody hear about CryptoKitties? Yeah,
well,
okay,
no
lots of.
Yeah.
So this is like tradable Pokemon on public Ethereum, incumbent banks or corporates are not going to build something like CryptoKitties, probably.
Only we lived in that world.
But when you strip away the cute cats, unique tradable assets and assets that evolve and blend, they look a lot like maybe what's a different kind of financial asset class. And something that banks are interested in is novel asset classes, because it's been a while since we saw one. So you can't really underestimate the kind of innovation that happens from, they're probably not in a garage at this point. They're just in some sort of corporate lab that calls itself a garage. Oh, WeWork. But having access and talking to people that are building things, just because it's cool. And trying to figure out the business model as they go has been really interesting. And as a final comment, it's not all about Ethereum. There's companies like Factom that have been operating on the Bitcoin blockchain for years, registering pointers to companies' files to the Bitcoin blockchain to make sure that you don't lose documents over time. So the idea that there's no production use cases for business on blockchain is just not really true.
And I'm glad you brought up two public blockchains, Ethereum and Bitcoin. Can you talk a little bit about, first of all, for anyone who might not understand the concept of a fork, can you explain just a little bit about what it means that Quorum is a fork of Ethereum and why that might be important to a builder, an entrepreneur, somebody who wants to move past the design phase into the build phase?
Sure. So along with HODL, you should be biddling.
Biddling, yes.
That's the other hashtag for people who are actually building things. So what happens when you fork a code base on GitHub? Anybody can go out there. You can download Quorum. You can fork it yourself into your own kind of private repository, and then you can start building on it and making your own modifications. You can also do that with Fabric. You can do that with the Corda code that's been open source. There's any number of open source projects. I think if there's one really good thing that's come out of blockchain so far, it's been a huge push at businesses to embrace open source technology. So they're all kind of bringing this code in-house. But once you fork that code, what you benefit from is the ongoing improvements in the upstream project. So the delta in the code base between something like public Ethereum and Quorum is actually quite small. We only needed to focus on addressing the specific challenges, such as data privacy, especially solving privacy in a decentralized way, the ability to have known participants instead of completely anonymous participants, which is important for know your customer and anti-money laundering and a variety of other things, legal recourse, dispute resolution, and also to add a bunch of other hooks into existing enterprise systems, whether that's your settlement system or LDAP or whatever it is that you want. But we don't have to focus as much on something like solving scaling. Because that's something that the public Ethereum blockchain is highly incentivized right now to try to solve on their own. So, and also because public Ethereum is running in this hostile production environment every day, we benefit from all of the ongoing, what I like to call free security testing of the public blockchain environment.
Unpack that just a little bit. The free security testing that
Yes.
the public Ethereum blockchain might be providing for forks of the Ethereum blockchain. Why, from a business perspective, how much money is that saving and why is that important?
I mean, the only reason that people think enterprise blockchain is more secure, hasn't been hacked, is because it's not accessible. In the same way, because it's running in enterprise data centers behind existing kind of firewall structures. It's a different security model. Enterprise blockchain, as people think of it, is generally, it's not just about having known participants, but it usually involves having some people that are inside the network and some people that are outside the network. And there's firewalls and whatnot. So in a public blockchain system, because anyone has access, it's basically constantly under attack. And as the blockchain, although there's no such thing as the blockchain, but the underlying blockchain of most of these networks has not been hacked. Now, I did hear about a 51% attack on Verge this morning, I think. So, but in most cases, it's not actually the underlying blockchain that has been hacked. When you hear about these things in the headlines, it's generally an exchange or a wallet, a centralized kind of service that sits on top of that. And that's where the money's held, so that's what's most important. But as what we're using in Quorum is the underlying blockchain piece. And that itself has thus far proven to be highly secure.
And I just want to add, there is a public instance now of Hyperledger Indy, which is the sovereign network, and we'll see public permission networks launch that are instances of Fabric and Sawtooth this year.
Yep.
I want to thank you for that transition. You anticipated my question. I'd love, Brian, if you could first of all talk about the subtly different build strategies of helping oversee these multiple open source blockchain platforms and how it is that you, as the executive director, help the people who approach you find the right platform. And I always imagine you as kind of like a doctor giving prescriptions and listening for the problem that has to be solved and then sitting into the right blockchain. But how are you actually overseeing this?
No, at best, I'm the hospital administrator rather than like the doctor themselves. No, so we're kind of within Hyperledger a hybrid of the Linux a kind of approach to building software, which really was about Linus Torvalds kind of being the architect, if you will, in like the Matrix, right? Sitting there going, how does this lay out, and how do I really kind of like still take advantage of the fact that thousands of devs are showing up for each release and getting the best out of all the different ideas, with the Apache Software Foundation's kind of approach, which was a bit more of, here's a portfolio of different projects that all solve different kinds of problems in different ways, but have something in common, right? So what's common about all the projects at Hyperledger is the open source license they use, which is the Apache license, a very business-friendly license. The way in which we expect the developers to work, which is not they get together at a WeWork or in a corporate, in one company's kind of meeting room, but instead to be doing not just committing code to a GitHub repo, but actually having their conversations, having their architectural decisions, their decisions about what gets into this release, all of that happening in a public place, right? In a way that's archivable, in a way that's referenceable, so that in a year when somebody looks at an architecture and goes, what was the thought process that led to this? You can unpack that. You can and avoid flipping back and forth between two states when you don't have a memory, an institutional memory behind what developed that software, right? So it's that software development process that has to be public. It's also when something is called 1.0 at Hyperledger, it means we've done a security audit of that code with outside firms that have looked at it. We stand up a bug bounty for that code as well. And we do all sorts of things to try to make sure that when people hear Hyperledger anything, that there's a default understanding of the level of quality in the code and a level of understanding that it's not, any one of these is not a single vendor kind of show, right? That there are multiple pathways for support, for customization, for deployment, that sort of thing.
So from a build perspective, fully moving past the design and looking at the build step of the conference, what exactly does it mean that Hyperledger has 2 1.0 installations with at least 4 preparing to go live this year?
Yeah, it means instead of having one product that has to be both dessert topping and floor wax, you have 2 separate products. That's a Saturday Night Live reference. It means that there's choice. And we try to do some things to help people understand the differences between these projects. And Fabric comes very much more from a background from teams that have built large-scale distributed transaction systems in the past that didn't, where adding on to it kind of the elements of distributed trust has been kind of that evolutionary step, whereas Sawtooth came a bit more from asking how are the pure cryptocurrency architectures built, and then what do enterprises need from that. But these are like origin stories, Marvel origin stories, right? Like different characters, and it's hard to.
One of your 1.0s that's coming out this year that really has my attention, you mentioned already, which is Hyperledger Indy, which was contributed by Sovereign. One of the things that's interesting about that to me is that it does have that public blockchain sort of feel to it. In fact, the Sovereign Foundation that contributed the code is preparing to do an ICO, which is, as far as I understand, going to be a first for Hyperledger contributed code. What does that mean to you?
Well, we certainly have had members of Hyperledger who've run their own ICOs, right? And it looks like the Sovereign ICO would be more like the Ethereum ICO, where the funds that are raised in the pre-mine end up getting owned by this nonprofit that sits at the center, right? And Sovereign, by the way, and India, let me start with that. Let me start with kind of the problem it's intended to solve, which is, so identity, we all know identity on the internet is broken. And we kind of inherited this mainframe model of, you log into a server, and that server is where there's a bunch of profile information about you, and what happens on that server you have no connection to, right? They could end up selling it off or sharing it with others without much accountability to you, right? Let's invert that. instead of your data sitting on these remote kind of profile servers, and maybe you get single sign-on from one to the next, log in with Facebook, log in with Twitter, whatever, instead, let's bring that data close to you to something that looks somewhat between a hybrid between your cryptocurrency wallet and your browser's password manager, right? Something that says, all right, not only like the things that are attached to me, like my biometrics, my a password, that sort of thing, but also data that I set, like my home shipping address. So rather than my home shipping address living on 30 different sites, how about a pointer from those 30 sites to my wallet, where when I do move from one home to the next, I'm able to update it once, and then it propagates, right? Or to things like your diploma. Rather than your diploma being something that sits at the UPenn website, right? How about a diploma that's a certificate signed by UPenn that you hold in your wallet, that then when you go to apply for a job, you then upload and submit, and the job can check the signatures and make sure that it all checks out, it is a valid diploma. But even if UPenn disappears from the web, disappears from the internet, goes out of business, that won't happen, we know, but you still have that diploma, and you can still prove that you graduated, right? And so this is a principle called self-sovereign identity, this idea of turning identity back to something very close to the individuals. It's something where there's a demand for it, not just from us in the developed world who are very technological, but think about a refugee fleeing Syria who was a doctor in Syria, who had credentials in Syria, being able to bring with them those credentials, even when everything behind them is burning to the ground, to a refugee camp in Lebanon and show, yes, I'm a doctor and allow me to help treat patients, right? This is something that's now driving a lot of interest, and whether it's GDPR or Cambridge Analytica or others, there's a lot of demand to think about identity systems in this approach. So Hyperledger is working with a number of organizations out there, the Distributed Identity Foundation, the Sovereign Network, and companies like Microsoft and Accenture and IBM and others, and a lot of startups in this space, Evernym is one of them, to bring about this kind of different approach. And it's a mix of technology, so that's what we're building at Hyperledger in Indy, is a technology to stand up identity networks as public permissioned ledgers that connect these things called distributed identifiers. I won't go into too much into technology.
Don't make me cut you off, Brian.
Pull me back. But it's a large number of organizations working together, and many building end user interfaces to make this real.
Why does this have to be public? Why? I want to get into the connection between private permission ledgers and public ledgers, and kind of just wrap up our conversation here with the significance of that. We're historically, and by historically I mean for the last 18 months, been thinking of enterprise applications of blockchain as permissioned applications of blockchain, and we're just recently starting to see that there's a little more overlap there and a little more willingness from enterprises to use and to even publicly talk about public blockchains. What's going on there, and why is that important from a business perspective?
Yeah, there's been this kind of an idea that somehow public blockchains represent the people and permissioned blockchains represent incumbent business, and that therefore they're diametrically opposed, or that there's some sort of proxy war happening there. And it's really not fair to categorize an entire technology that way. But rather, what we're talking about, what Brian is alluding to, is that one of the innovations of blockchain technology is that it allows us to keep information at the source with the information owner and the primary record holder. Whether that primary record originates from a business or from an individual, it can reside at that source and be accessed at its source in perpetuity. And there has historically been a trade-off between convenience and security, such that humans have always chosen convenience, never security, right? And you see that with Facebook. People will give away all their personal data if you tell them what Buffy the Vampire Slayer character they might be, right? And just the incentivization model hasn't been there. So if it's all over the news, take back your data, but we're not enabled to actually do that right now. There's systems like Diaspora, there's systems like Mastodon that are like trying to do this, but they've been around for 5-10 years and have failed to really take off because humans don't care. Or they don't care until it's too late and they are a displaced person and all of a sudden they didn't see that coming. So if you could create incentivization and economic and commercial models where you could like imagine that, and this pairs with some of the secure local computing kind of things that you might have heard about as well, like Intel's SGX chipset and iPhone Secure Enclave. But imagine you wanted to participate in a medical study, and instead of sending all your data off to some sort of faceless organization that you don't know what's going to happen with that data in the future, they could send their encrypted algorithm to you to run on your data set locally, and then anonymously the result set could be responded, and you could actually get paid for that, provably. So you could license your own data. So it might be possible to change the way that we think about data, and in that case, the cost of Facebook's operating model goes from zero, in that we all just give stuff away for free, to anything that is non-zero. And that is a major economic shift.
So looking forward, in addition to the potentially increasing introduction of public blockchains to enterprises, you are also going off into some other stuff here. I know that you can't go into too many details, but you did say you are able to share that today is an important day for you in some capacity. Could you talk to us a little bit about why today is important?
Sure. It is my last day at J.P. Morgan today. But if people clap, is that weird? No. Okay. It's been an amazing, I mean, I've been there for 7 years, since way before the blockchain team existed. I helped launch another single dealer platform that they have called J.P. Morgan Markets. But I've been interested in digital privacy. I helped co-develop digital privacy and technical ethics curriculum for girls who code in their first year that they launched. Like, I've worked on this stuff for a long time. And I think that there's a lot more work to be done. It is kind of like standing in the 90s and looking out at the internet and imagining what Netflix on a phone in your hand would be like then, and it just sounds like preposterous sci-fi. But there's a lot of work to do, and the team is in a wonderful position and has J.P. Morgan, there's a lot of large banks in the world. I think there's a misperception that for some reason, because J.P. Morgan did it, that or said, here's our blockchain platform, or here's our white paper, that that everyone has to pay attention. But there are a lot of banks in the world, and J.P. Morgan right now is positioned as a very strong thought leader in the space because of the innovative work that the entire team has done. So they have a lot of resources, and I think they're on a great course to continue that.
Well, good luck in your future work. Can't wait till you can talk more about it. A couple of questions from the audience before we wrap things up here. Right over here.
I guess this is a question for Amber, who can now speak freely about this.
Not until 5 p.m., but sure.
So, working at a diversified financial institution with many different lines of businesses, J.P. Morgan obviously has some that would benefit from blockchain in ways that would hurt others. How do you guys prioritize your projects, and how do you determine who's going to win out, whether it's asset and wealth management versus the corporate investment bank or commercial bank for that matter?
It's a good question. I think if anyone had a crystal ball to figure out exactly what the interaction of different confluence of events are going to be to fully understand the ROI, which is what I get asked, 2 years ago, someone's looking at a Blockchain 101 deck. What's the ROI for my business? I don't know. So 42, always the answer, or 1337. There are certain businesses where it's probably harder to figure out what the impact is going to be, and certain ones where it's easier to get a head start because, for example, if you're dealing with something that looks more like a private placement debt or something that is more lightly regulated, then you can play around with that business more. And because imagine the cost, the marginal cost of sending the first email. It's like incredibly high. And so right now you have to figure out if you're going to dedicate tens or 50s of millions of dollars to bring one use case to market, there has to be a very, very strong business case. But once you get one or two of those out there and the marginal cost goes down, then it'll be this kind of cascading effect of additional businesses coming online. And you can't really discount the idea that post-trade settlement, great, information sharing, speeding up settlement, great, but for example, the double spend problem looks a lot like collateral management. So if there are places in the world where we can't do business because the same asset is pledged at multiple windows, therefore meaning that in the instance of a default, only one person gets that collateral, and you could solve something like that with the distributed ledger, well, the way that you manage collateral has impacts to your risk business, which has impacts to your intraday liquidity business. So financial services are all interconnected, and it's going to take quite a while to figure out what the full monetary impact looks like.
Awesome. Who else? Right here, sir. The other guy with longer hair and a beard than me here today.
You have a nicer beard than I do. I guess this is really for Brian and Amber. If you're looking at a situation where you control your data, and in a lot of ways you can control your contributions to the space even more broadly, do you think about moving from a situation where you're talking about value and values more than you're talking about price and earnings? Because personal values kind of come into the game very quickly when you can manage your own contributions, like a coder. Anyone who puts a new line of code or what have you, that we can publicly value these things. And the concept, do you think about the concept of value more deeply in that sense?
I think with open source software, the fact, it's the Thomas Jefferson quote, right? I am not diminished by, my light is not diminished when my torch is not diminished when it's used to light yours, right? I don't remember the exact quote, but there's a rush to tokenize all the things, right? That I think misses the fact that there are certain types of value exchange that are non-zero sum, right? That such as sharing IP widely, such as credit, giving credit widely, right? And I do think that blockchain technology gives us a great distributed accounting system for things that were otherwise expensive to account for before. But I'm hesitant to look at it as the complete answer to how we fund open source software going forward, for example, right? So it's going to be really exciting when we can see how we can manage the distribution of our data through things like self-sovereign ID, and potentially be able to make money from parties that say, hey, I will give you some tokens or some share of something in exchange for some demographic data. But I'm a little more excited by the idea of being able to know who I shared my medical record with, and then be able to claw that back when that's no longer my doctor, right? Having that agency over that data and my representation online, compared to being a vassal on somebody's estate, like I kind of feel when I use Facebook, right? So it's a much deeper question I think we have time to answer here, and I don't pretend to have answers to it all, but it's a thought-provoking question.
I would say that it's a very good question, but I think rational economic theory perhaps underestimates the power of compassion, and we have the opportunity. I know I was talking about the trade-off between convenience and security, and that perhaps economic models are the only way to fix that. That's because people don't value things for themselves, but they tend to actually value other people more than they value their own things sometimes. But if you imagine that you see a lot of work in social good and philanthropy when it comes to blockchain, and I think that there's the idea that somehow it's this panacea for everything, and we are at this point where it's possible to spin this magical utopian vision of a blockchain-enabled world where everyone is in control of their own data, and the banks have dissolved and all these things. But it's also possible to imagine an incredibly dystopic panopticon wherein everyone is putting data on a public public blockchain that becomes a massive surveillance lake that anyone can access from any authoritarian regime around the world. And those decisions have not yet been made. And the reason I think that both Brian and I spend a lot of time here, not to speak for you, but I know coming from your background, maybe I can speak for you a little bit, that the choices that we make this early in the creation of something that becomes the Internet of Value will have long-reaching ramifications. And blockchain can look like whatever you want. That's why it's easy to throw around as a buzzword. But if you care about digital privacy, if you care about human rights, if you care about economics, if you care about behavioral theory, if you care about game theory, if you care about cryptography and national security, all of those things are coming together as we figure out how to create these next generation systems. And it's not just rockstar developers that have a lot to contribute. We really need economists and philanthropists and human rights advocates and everyone else. So
Good
please
question.
join us.
Great answers, yes. Right over here. Sir with the blue, oh, you're waiting for a microphone? Just shout it out.
Question for Brian. As a startup, we're building things on a supply chain solution, actually on Sawtooth, and it has Ethereum compatibility. Do you foresee any other, public blockchain interoperability in the future with the Sawtooth project? And on that note, also, do you see any kind of innovation with the closer project?
Brian, let me quickly repeat the question.
Sure.
He's building with Sawtooth, wondering if there's going to be public blockchain integration down the road.
And there is, and he noted there is support for the Ethereum smart contract engine on top of Sawtooth, which is one of the DLTs in the Hyperledger project. And he was wondering if there'd be support for other public chain technologies, as well as support on Composer. So the good news is I'm not Linus Torvalds in terms of like how the project runs. And I say that's good because I don't have nearly either the creativity or personal energy that either Linus has for the kernel or really that this community needs, right? It's a much more decentralized approach to doing roadmap planning. I'm a cheerleader. I go out there and I try to find folks and encourage them to do what we're doing and to get involved. And so if there are other public chains interested in bringing some of their technology, in doing that integration, my job is to make sure Hyperledger is as welcoming a home for that kind of effort, but ultimately it's a duocracy, right? And so things don't get done if nobody wants them done. It's almost like Darwinian kind of evolution applied to software development, right? And so the door is open, also open to integration between any two different components within Hyperledger, but there's hard work underneath that. And so we never minimize that, nor pretend that we know the right things that get delivered. And so that's both the bane of our existence, but also part of what makes this community actually work.
Up at the top there, blue sport jacket, or green, yeah, there we go.
It's not actually a question, it's a comment. If you're interested in doing things like that, talk to the Fabric maintainers, talk to the Composer maintainers. My name is Catherine Harrison, I'm part of the IBM blockchain.
Catherine with the plug. Right over here.
Sure. Quick question. So you talked about the benefits of Ethereum, Hyperledger, about having public testing, right? You're vetting out for public testing. Is there anything unique about the blockchain and the integrity in the fact that it's a decentralized architecture? There are open source architectures, and open source has an integrity because thousands of hands fixing problems as they occur. Is there anything unique about blockchain and its derivatives in this respect?
So when we talk about permissioned blockchains, there's an implied governance structure that's somewhat different than a public blockchain. In a public blockchain, you have one collective global governance process, which is necessarily slow and leads to a lot of fighting on Twitter. But that means that anyone can participate and anyone can join. It's a very low barrier to entry, and it allows the perpetuation of the censorship resistance, et cetera, properties that make public blockchains interesting. But when you spin up a permissioned blockchain, there's not a single mainnet for that, or I guess maybe we'll see some of these launching, but right now what we've seen over the last couple years has been use case specific, like people that have similar incentives and are trying to solve a similar problem come together and create the permission blockchain. And that means that you get to create your own governance structure within your own little universe. So you can set the rules. Some blockchains function okay with decentralized governance, some permissioned ones, some permissioned blockchains or distributed ledgers really expect there to be a central utility operator that determines who can come in and come out. So this is just, I guess, the punting answer is to say there's no such thing as the blockchain. It depends which architecture you're looking at, and then how the people that are creating that network choose to govern themselves. You can become incredibly inclusive. You can set rules that say only one entity can put a smart contract on the network. You can become as restrictive as you want. So there's really there's no specific rules. Yeah?
If I can take another stab at this. First, I'd separate out permissioned and unpermissioned from public and private. I mean, there's one part of that corner that probably doesn't really apply, which is unpermissioned private. But in the other three areas, and think of these also as spectrums, right? Like there's a difference between a small 10-bank kind of network and one that would be thousands of participants in a supply chain. And ultimately, in these chains, you're going to want to have a governance structure that adapts to the local industry, adapts to perhaps the geography they're operating in, but almost always the Metcalfes Law still applies, which is the value of the network is the square of the number of nodes, and so there'll be pressure to make these larger and larger and make it easier and easier to join these networks. And so I don't know what the right layer of granularity will be, but what I suspect is we're going to find a lot of pressure for these organizations that act kind of like the referee on the football field to exhibit a degree of minimum viable governance, meaning what's the easiest way for a new org, especially a startup that's going to come in and disrupt all the things, to join that network and participate in that transaction flow and be a nice competitive force and something that makes the antitrust regulators happy as well, right? And I'll close with, one thing we've had in open source software for 20 years, the defining characteristic of open source software is the right to fork. Right, the right to say, put blockchain to the side for a second. Linus Torvalds, you're not a good leader of the project, and everybody else using Linux is going to pick up and bring their code with them and follow a different leader or set of leaders. And you have that in blockchain technology as well. This is what is in common between these different networks, unless you're using something like Corda or other things that aren't real DLTs, is you have a copy, of the transaction history, right? And so even in a permission network, the participants, if they decide that convener, that governance organization has gone crazy on them and is charging rent and is making bad decisions, just like a bad referee on a football field, they can pick up their transactions, they can pick up the network and choose a different leader, choose a different elector. And that, I think, is going to force, keep it from becoming, essentially just another kind of centralized network, keep those who are conveners accountable, right? And ultimately, it will be a much different kind of business world than the centralized 800-pound gorilla, Uber, eBay style networks, transaction networks we have today.
So
I just want to throw one more thing on that, is that to further what Brian's saying, like when you're talking about a supply chain that has a million different participants in it, people seem to think that, Bitcoin being a public network means that it's got millions and millions of participants, but it doesn't. It's got, like 12,000 nodes? So it doesn't take a very long time before a permission network has more participants than a public network. The only difference is the access model. And, we have toyed around with Quorum with doing something that's as simple as looks like a Slack kind of channel auto join, put in an email and join. The difference is just what censorship resistance means as far as can anybody join, when are you a bad actor, can you get kicked out, and what you're allowed to do when you're in that network. But this whole blend, networks of networks are important, and I would imagine that we end up with something that looks a lot more like our current internet, that's a lot of subnets hinged together than one massive world blockchain.
So I think we have time for one more quick question from the audience. I want to ask, if we can, to make sure we're down in the lower right-hand corner here with Invest. Are there any entrepreneurs who are founding companies who haven't launched yet, who have any questions about building and the future and investing? Right up here in the middle with the red coat. Yes. Holler out really loud so everyone can hear you.
Hi, my question is for Amber. As a machine learning engineer, I'm fascinated by Plenary learning. I'd love to build what you described. It would definitely solve the whole Cambridge Analytica. How would you advise on going about which tools I would go? Which should I'm playing around with Truffle. What should I go ahead and start playing with?
You should probably talk to me after.
After five tonight.
No, there's some very interesting projects globally that are starting to tackle exactly that. There's probably 5 different white papers that I've read in, that talk about that. There's only one I know that has real working code. And I think hooking up with people that are starting to do real good work would probably be a good thing.
Thank you very much. I'd like to ask the audience if you would give our panel a round of applause here. And thank you all, and I can't wait to see what you guys build out of this. And please do keep me posted in the future when you make those big announcements. Good luck.